Hello, in this video we're going to see how to analyze stocks or how to research stocks. First let me tell you why it is important to analyze a stock, why it is important to research a stock. Because without analyzing a stock, if you invest in any stock or a company, if the company is not doing good, you will be getting trapped. The stock price of the company will start going down and you will start making loss. That is why it is very important to analyze a stock before investing. To analyze a stock or to research a stock, we're going to follow various parameters. Let me explain the parameters one by one. The first important parameter is economic. It is very important to know the economics before investing in any company. Why? Because everything is dependent on economic condition only. If the economic condition of India is good, then the stock market will be good. If the stock market is good, then only the stock will be good. Otherwise, and no one will invest in stock, that's why the stock price will start going down. So it is very important to analyze economic condition before investing in any company. If you take economics, there is lot of parameters in economics, such like microeconomics and macroeconomics. Microeconomics, which is nothing but studying about individuals, and macroeconomics, which is nothing but studying about the overall nations. And another parameter is GDP, which is nothing but gross domestic product. GDP is used to determine the overall health of the economy or health of the country. Based on the GDP, the country is valued. GDP is all about studying about the goods and services that has been manufactured as well as exported to other countries. Based on that, and another parameter is inflation. This is very important parameters because inflation determines the consumer spending, how much the consumer spend. That is all about the inflation. If the consumer is spending or paying too much, the inflation will keep going up. That is bad for our economy. Whenever the inflation is keep going up, the interest rate will keep going up. Why? Because to stable the economy. That will be happened by RBI policy. So the next parameter is interest rate. This interest rate will be fixed every quarter by the RBI on the RBI policy based on the inflation rate as well as the money supply. And another parameter is unemployment rate. Unemployment rate is nothing but the unemployed professionals exist in our country. How much unemployed professional exists in the country? That is all about the unemployment rate. If the unemployment rate is low, it is good for our country. If it is high, which is nothing but which says there is more unemployed professional in our country, which is bad for our country. And another parameter is FDI and FPI. FDI is nothing but foreign direct investment and FPI is nothing but foreign portfolio investment. This is all about the investment by foreigners. If the foreigners is investing in our India, it is very good for our country. So it is good to monitor whether FTA and FPA is investing in our country. Balance of trade. This is all about the import and exports. As you know well, every country is good in something, but it is not good in everything. So, for example, you can take some country is manufacturing oil, and some country is manufacturing copper, and some country is manufacturing plastics, and some country is good in manufacturing gold. So, if we want gold, we can import from the particular country, and if we want oil, we can import from the Arabic country. Such like that, we also exporting young, energetic Indian talented IT professional to the USA. Also, we are exporting pharma to the USA. If we are good in something, then we can manufacture in our country and we can export to the country which needs it. So that is how the balance of trade happen. If the import is higher than export, it is bad for our country. And if the export is higher than imports, then it is very good for country. That means the country is growing. It is very important to analyze all these factors before investing, especially if you are investing in index such like Nifty or Bank Nifty. It is very important to analyze the economic situation because this economic situation will highly impact the Nifty or Bank Nifty index. The next important parameter for analyzing the stock is industry. So before investing in any stocks, we have to understand about the industry, which industry the company belongs to, or which industry the stock belongs to. Because you can see sugar industry is good in festival season, IT industry is good in all the time, and pharma industries was very good during the COVID time, and air conditioner good during the summer season. So before investing in any stocks, it is very important to understand which industry the company belongs to, and then you have to analyze the industry before investing in any stocks. In industry, we having parameters such like Michael Porter 5 force model. Michael Porter 5 force model is used to understand about the weakness and strength of the industry. It is all about studying about the strength, weakness, threats, substitutes, etc. And another parameter is pestle analysis. This is all about analyzing political, economical, social, technological, legal, and environmental analysis. And another parameter is BCG matrix. Using BCG matrix, you can analyze the growth opportunity of companies or stocks. And another parameter is SCP analysis. SCP analysis is all about structure, conduct, and performance. Structure of market, conduct of firm, and performance of economic. This is all about the structure, conduct, performance analysis. So these are the parameters which we can use for analyzing the industry. The next important parameter to analyze a stock is company analysis. So before investing in any stocks, you need to know about the company. We analyze company in two ways. One is qualitative and another one is quantitative. Qualitative is nothing but studying about the quality of the company. And quantitative is nothing but studying about the quantity, which is nothing but about the numbers. Now let's see about the qualitative. So before investing in any company, you should understand about the business, what the business is, how they are doing the business. Is there any competitors? Will the company survive for long period? All those things we need to analyze before investing. It is very important to analyze the management about the company, how the management is doing. If the management is good, the company will do good. If the management is bad, company will also get impact. So it is very important to analyze the management before investing. And another parameter is SWOT analysis. This is all about the strength, weakness, opportunities, and threat. What is the strength of company? What is the weakness of the company? What is the opportunity of this company? And what is the threat? That is all about the SWOT analysis. And another parameter is, and another and very important parameter is risk. Studying about the risk of the company. So this is all about the qualitative. It's about all about the quality of the company. And now let's see about the quantitative. So it is very important to analyze all these factors before investing in any company. So it is very important to analyze all these quantitative factors before investing in any company. And another parameter is by using technical analysis, we can analyze a stock. Technical analysis is all about studying about the price action of the company. Technical analysis is all about by looking at the past, we're going to determine what's going to happen in future by looking at the chart. That is all about the technical analysis. Here we will be having something called support and resistance. Support, which is nothing but generally a low, and resistance, which is nothing but generally a high. By using the technical analysis, we can also check how the company performed in past. By looking at the chart, we can come to know how the company has performed in past. By looking at the past, we're going to predict the future. That is all about a technical analysis. We're going to use the entry and exit based on the highs and lows which has happened in past. That is all about the technical analysis. And another parameter for analyzing a stock is valuation. Valuation is very important. It is very important to evaluate the company before investing. The original worth of the company may be something, but it may trade higher than that price. The original value of the stock may be something like 10 rupees, but it may trade at 1000 rupees. If you are buying 10 rupees stock at 1000 rupees, it means you are paying too much, which will be the loss for you. So it is very important to evaluate the company before investing. The next important parameter is corporate actions. It is very important to monitor the corporate actions very closely for any companies which you are going to invest. Corporate actions such like dividends. As you know well, every company will keep on generating profits. If the company is making more profits, the company is used to share the profits on way of the dividends to the shareholders who have invested in particular company. Generally, the dividends will be in form of cash as well as stock. Either it can be a cash dividend or it can be stock dividend. Generally, company used to pay dividends in way of cash. And then we having bonus. This is one of the corporate actions. If the company is making very big profits, then it's used to share the profits in way of the bonus. You can see some company usually declare bonus such like 1:1, which means if you hold one stock, the company is used to give one stock extra, which is nothing but bonus. And another corporate action is right issue, which is nothing but if you hold any stocks, the right issue is used to buy the same stock at less price. Company usually declare right issue to allow the investor to buy the same stock again at discount price, which is nothing but right issue. And another corporate action is stock split. If the price of stock is keep going up, if the stock exceeds the price, investors won't have money to invest. So the company can split the stock, which will divide the number of stocks and reduce the price, which allow the investor to buy the stock at less price, which is nothing but stock split. And another corporate action is merger and acquisition, which is nothing but if the two companies doing the same business, if one company is struggling to do the business, the company can offer merger to the competitor just by merging the two entities into one. That is all about the merger. And another corporate action is buyback. Buyback is nothing but the company which announced buyback will buy the same company back to the company. The founder or promoter will buy the same company, which is nothing but buyback. And another corporate action is delisting. It is very important corporate action because delisting is nothing but removal of company or closing the company. If the company is delisted, you no more can trade the stock or you will lose the money. If the company is going to delist, it will be announced. You can check whether the company is going to delist before investing. Because on record date, the company will be delisted. If you hold any stock which is going to delist, you will lose your money. So these are the available corporate actions. It is very important to closely monitor the corporate action of the company which you have invested or which you are going to invest. The last important parameter is about risk. There is lot of risk available in stock market, and generally you will be knowing stock market is subject to market risk. So it is very important to understand the risk before investing. We having variety of risk in stock market, such like inflation risk. Inflation is very major risk. If inflation is keep going high, it will destroy the country. And another risk is interest rate risk. High interest rate will affect auto industry as well as the company which is running in loan or which is running in debt. If the interest rates keep going high, the company who got loan and started the company will struggle to pay the loan, which will impact the company. It is very important risk. And another risk is business risk. The business may have lot of competitors. That is one of the risks. Other than that, the management should be good. If the management is not good, that is one of the risks. And another risk is market risk. Stock market will keep on fluctuating, which is nothing but the price risk. And another risk is political risk. Political condition will highly impact the country. If the leader is not good, the country performance will not be good. If the country performance is not good, then no foreigners will invest in our country, or no investor will ready to invest in any company. So it is very important to know about the political factors before investing in any company, or political risk before investing in any company. And counterparty risk is nothing but supply and demand. If there is more seller than the buyer, then the stock price will keep going down. If there is more buyer, then the stock price will keep going up. That is all about the counterparty risk. And another risk is country risk. It is very important to monitor the country risk. Since because of globalization, any impact in any country will impact Indian stock market also. So it is very important to monitor the country risk. So these are the risks which is there in stock market. So it is very important to know about all these risks before investing in stock market. So this is all about the factors which you have to know before investing in any stock.